We have the data. It sits right here. This report, produced by our friends over at RETR, tells us exactly what's going on in the mortgage industry. Over 10,000 loan originators have made a move in the first 5 months of 2026. 1,990 companies have actually added more producers, yet 2,285 companies have actually lost originators. In today's episode, the TLOP team and I are going to break down the information inside of this report and talk about what does it mean to you and what does it mean to our industry. Check this out. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and with me from the TLOP team, I got Marketing Mike and our producer extraordinaire, Special K, a.k.a. Karina Mojica. What's up, y'all?
Hey.
What's happening?
It's nice to be back, huh? We could do an episode together.
Yeah.
Yeah, just crushed a podcast episode with our dude, Phil Johnny, over at Town Bank.
Yeah.
Dude, he crushes it. Like, you all only got to see part of it
Right.
when you tuned into the show.
Yeah.
Phil and I hung out for an hour before the show. Then we went to lunch for an hour afterwards. The hour afterwards was me learning all about this business venture that he has embarked on.
Yeah.
Doing financial literacy for active duty as well as veterans.
Yeah.
Oh my God. Like, just mind blown the way that his brain works. So shout out to Phil.
Shout out, Phil.
Thank you for all your time. Karina, I see you got some new hair.
Yeah, I do.
Let's go. New hair don't care.
Oh,
Yes,
you're
yes.
rocking your Alicia Keys look.
But like some of it's braided.
So many
Like some of
people
it's
say that.
you like the blonde is.
Yeah, it's all just like it's just fake synthetic hair like weaved into my.
Yeah, but the braids are your hair? Like
Yeah.
the actual braids?
Well,
That's cool.
Yeah, the braids are my hair, but it's also braided in with fake hair too.
Oh,
Yeah.
that's
Yeah.
cool.
Yeah, but yeah, you were on one of those Carnival cruise lines,
yes,
right?
I was all last week. I had a great time. It was so much
Yeah,
fun.
I heard you had a great time,
Yeah.
right?
She got banned, I heard. She got
I
banned.
don't think she got banned,
Got
but
a little
three
restricted.
days,
Yeah.
no alcohol.
look,
Yeah.
when you don't have any physical impairments naturally.
That makes me sound like an alcoholic. Oh my god.
No, I didn't say why it was.
No, I know.
You're,
I'm just
you're
saying,
ratting
just
yourself
getting
out.
restricted from drinking on a boat, like that sounds crazy.
Y'all,
That's awesome.
I have been restricted from drinking at the Monte Carlo in Vegas.
In 7 states.
and no, I think only just one state.
Wait, for what?
Good.
Well, they just said I couldn't drink anymore. I was allowed to roll dice and gamble,
Yeah.
but they cut me off. Then they turned me back on,
Yeah.
and then they cut me back off.
Oh my
then cut me
God.
back on. Like, I had stayed at that craps table for such a long period of time.
They wanted the money, but they had to be responsible.
It's
Right.
not one of my proudest moments,
That's
right?
awesome.
I was having fun. I was winning. I was tipping.
That's
No,
awesome.
but Karina, your hair does look super
Thank
nice.
you.
Yeah, it's
Thank
very
you.
Yeah,
Thank you.
but you took a vacation. You went
I
down to the
did.
Caribbean, went on a cruise with some friends.
I
and
did.
Yes, it's a good cruise if you are physically able, but somehow you have to use a wheelchair.
Yes.
Well,
And that is Karina.
I
we
mean-
might have to show the picture.
Oh my god.
no, we
No,
don't. We
seriously.
don't show pictures. We don't do that, Mike. But it's like, look, sometimes you twist an ankle dancing.
Right.
Sometimes you hurt a knee falling downstairs.
Sometimes you have a wheelchair when you drank too much.
Sometimes you go on one of those catamarans that offers unlimited hunch punch, and after snorkeling, you turn it up and turn it out.
It's awesome.
A little
Yeah.
too much.
Proud of you.
Well,
Thank you.
I'm stoked to be in here. Mikey, you're wearing your captain's hat today.
I'm wearing it. T-Lop Unite, Caribbean Takeover.
Yeah,
I'm
we're
ready.
We honestly are a little bit late recording today because we're debating how much to podcast from the cruise ship.
Yep, from the ship.
Right, so we're going on this cruise ship September 14th through 18th. Everyone tuned in right now. This is your official invite.
Yep.
Go to our website, tloponline.com. When you go there under events, or it's just easier, look at the tag that says Unite. That's the name of the event. Click it. You can see all the details.
You can get a cabin as low as $650 a person
That's-
with double occupancy.
Like, think about this, $650 per person.
Yep.
Okay, that's your food.
Yep.
That's your entertainment. That's 4 nights of
Almost a week.
right. It's 4 nights of like a cabin, a hotel room.
Yeah.
And then it's full access to all of the TLOP activities.
Yep.
which TLAP activities are going to include your alcohol,
Yes.
and it's going to include, or your refreshments if you don't drink alcohol. We don't
Yep.
want to promote that.
Yep.
But yeah, it's like, where else can you go and be with 150 other mortgage originators where you are networking, you're masterminding? Like,
Yeah.
yeah, we're doing all this, but we're having to solve for how much are we going to podcast, when, where, etc. Because I do want to podcast with Coach Gwen. I do want to podcast with Coaches Scott and Ross. I do want to connect with Coach Rebecca. And, obviously any opportunity I get with Coach Brian Kimball. I mean, these are our coaches and they are changing lives right now. We haven't called up with them in over a year, some maybe 2 years. It's just time. Coach Christie's easy.
Yeah.
She lives in Orlando. She can come by the studio.
Super cool.
But
love
all the other
Christy.
coaches are flying in from all over the country.
Yep.
So I want to take advantage of it. I just need to know when we're going to squeeze it in. That's for you and I
We'll figure it out.
to solve for
We'll get it.
another day. The one thing we will do is the one day that we do our sales summit. Think about this, a sales summit at sea.
I know.
How cool is that? We're doing a sales summit at sea, but when we do it, we're going to time block an hour to podcast from the sales summit on the main stage with a handheld microphone in the audience. And this podcast episode is going to be only as good as the audience allows it to be based on the questions they answer.
And we may or may not have JC.
We will
Up with
100%
you.
have JC.
Yep,
It's going to be me and JC, OG.
Even if we have
old
to drag
school.
him.
Nah, he already committed to it. OG,
Love it.
old school, Dio and JC doing a podcast episode. The difference is our topic is going to be dictated by the audience members and the questions.
Yeah, I'm excited. That's going to be cool.
Yeah. But hey, we're going to get into today's data,
Yep.
today's information, today's show. But before we do, we have to take a quick pause so we can hear from today's show sponsor. So check this out. Y'all, something big is happening at Lower Mortgage. And if you're paying attention to this industry, you've probably noticed. In just the last month alone, Lower has added some serious horsepower. We're talking top producers representing over $350 million in volume. These aren't rookies kicking tires. These are heavy hitters who've done their homework and made the move. That should tell you something. On top of that, Lower just acquired Movoto, a top 5 real estate portal with over 150 visitors just last year. Before that, they brought in Neat Labs, and now they're launching Lower OS, a next-gen mortgage platform that's cutting loan delivery times down to 10 days. This isn't a company standing still. Lower doubled their volume last year, and they're projecting another 40 to 50% growth this year. The best in the business are taking notice, and they're voting with their feet. Here's the reality. The companies that are going to win in this market are the ones investing in technology, building real infrastructure, and competing at scale. Lower is doing all of that. They're going head to head with the Rockets of the world, and they're built for originators, not against them. If you're a producer who wants to be a part of something that's actually going somewhere, not just surviving, but growing, this is the moment. Lower Mortgage, the momentum is real. All right, so we're back. So, Mike, we were on a call with our friends over at RETR.
Yep.
And in so many instances, RETR is better. I use RETR every single day.
Yep.
In fact,
They're sponsoring the cruise.
They are a sponsor of the cruise. So
Yep.
shout out to RETR for stepping up and being a First Mate sponsor.
Yep.
And I was thinking about this the other day. I think I've turned RETR into a verb. Like I've said to people like, hey, Karina, don't make me RETR your ass.
Yeah.
Right? Or look
true.
out, I'll RETR you. Right? Or
Yeah.
hey, yeah, like
That's
RETR
great.
is now a verb. RETR. Don't make me RETR your ass.
I
or
love that.
yeah, keep talking. I'm gonna RETR you.
Yeah, super standard.
Yeah.
That's awesome.
But RETR provided us some data
Yep.
that I remember getting this from James Hooper. Shout out to James Hooper. And I remember getting it from him, and I was like, dude, can I do anything I want with this? He's like, yeah. I go, can I turn it into a podcast episode? He's like, yeah. So we have the data. I teased it in the soft opening. Read the data out to the people, and here's what we're going to do. You let me know what you see with your two eyes as a serial entrepreneur, right? As a guy who has a portfolio of companies. And I want to then digest, what does this actually mean to our audience?
Yeah.
Or what does it mean or state as it pertains to the status of the mortgage industry?
Now, what's better? Do you want me to go through the whole thing and you answer as a whole, or do you want me to go kind of one by one?
Well, let's look.
What's easier for you?
Let's go slide by slide. I think we have
All right.
about 10 different slides that they gave us on this particular report. And this data comes from January 1st through mid-May. So you're basically looking at about 4.5 months.
Yeah.
Right. So 4.5 months, roughly 40-ish% of the way through 2026.
Perfect. I mean, the biggest thing is when you look at this as a whole, there was 1,990 companies that gained LOs.
Yes, that's body
essentially.
count.
Right,
That is body count. If you had 100 LOs in December and you have 110 LOs right now,
you gained 10.
You're plus 10.
Okay. Yep. And then we had 2,285 companies that lost LOs. So to me, where are the LOs going?
Well, some are getting out of the business.
Yeah.
Okay, but there's also consolidation going on.
Right.
So when you see that companies are losing LOs, it's not these LOs are leaving the business, and they might not even have left on their own. It's just that company A acquired company B, or company C merged with company D.
Yeah.
And when it shows up in the data that RETR is pulling, like they don't have a way to specify whether or not this was a volunteer,
Right.
Or a voluntary move, or one that was made on behalf of them.
Yeah.
Now, it also shows that there's certain people that are in growth mode, or certain organizations in growth mode, and there's certain organizations that are trying to take advantage of what I would deem down market or a flat market, and there's others that, man, they're still trying to run the plays that worked in 2015 and 2016. And their goal is survival. Their goal isn't necessarily growth.
Yeah.
My advice to all originators is the same thing that you look for in a real estate agent is the same thing you look for in a company. What I look for in a real estate agent is, are you full-time? Are you professional? And are you in growth mode?
Yeah.
Okay, that's the type of realtor I want to partner with.
Yeah.
As a branch manager, I only want to hire LOs. Are you full-time? Yes. Are you professional? Yes. Are you in growth mode? That's what I'm looking for. If you're trying to choose your employer, you should be looking for the same thing: full-time, professional, and they're in growth mode.
Right.
And full-time means they're fully committed to retail, right? They're fully, and when I say retail to my broker friends, what I mean is they're fully committed to doing mortgages. Mortgages isn't something that they do on top of 5 or 6 other things. I want someone who they do mortgages. My division is focused on doing mortgages. Our priorities are being great at doing mortgages. Like, that's what I'm looking for.
Yeah.
So on the surface, that's how I would decipher that bit of data.
So, all right, let's go into more granular at the company level. So top 10 gainers by loan volume. And again, this is January 1st through May 12th.
Okay.
All right, of this year, 2026. CrossCountry, $4.54 billion in loan volume.
Cool. The
They're
rich
at the
get
top,
richer.
okay?
The rich get richer. They're
But look at the gap.
Okay, go
So
ahead.
then we go down to Huntington Bank, $3.42 billion. New American Funding, $2.88 billion. West Capital Lending, $2.53 billion. And then Guaranteed Rate at about $2 billion.
Yeah, so these people gained in volume.
Yep.
Like
gained in
over
volume.
the past 4.5 months, they have gained in volume.
Yep. And let me compare that to the losers, and we could have a bigger conversation. So if you look at that first, but gainers by volume, Rocket Mortgage was at the bottom, $1.2 billion. Okay. Gainers by volume. Rocket Mortgage, when you look at the top 10 losers by loan volume, they're at the top, $4.15 billion.
Okay.
Okay. Then we go to Cadence Bank, and Cadence Bank was not even on our top 10 gainers. Cadence Bank, $3.22 billion that they lost by loan volume. Loan Depot was about $2 billion.
Lost?
Yep, lost.
But did Loan Depot gain as well?
Loan Depot, yes, they're kind of middle of the field on both.
Okay.
$1.32 billion on the gain side.
Okay.
Summit Funding, so Summit was $1.46 billion. They are not on our gainer list, so they lost $1.46. CLM Mortgage, they are not on the gainer list either. CrossCountry is on here. CrossCountry was our top gainer. They're middle of the field on our losers by loan.
Yeah, and by the way, middle of the field, honestly, it's not middle of the field. Because you're looking at the top. So CrossCountry made the list for top gainer, but they also made the list for being
so
one
I guess that's year over year we must be looking at, or like time period over time period?
It's just looking at from when the year ended,
Right.
December 31st of 2025.
Yeah.
And then these first 4.5 months, are they positive or negative? If so, how much? So I wouldn't say they're middle of the pack, because if you're on this list, you're in the top, right? Like, how many names are on that list right now that you're looking at? Is it 5 or 7?
10.
10, right? So you're in the top 10 of losers and you're top 10 of gainers.
Yeah.
But there's some easy things for me to clarify.
Yeah.
Can I clarify the Huntington and the Cadence?
Yeah.
Cadence Bank was a big loser. Huntington was a big gainer.
Yep.
On paper.
Yep.
However, I will tell you that if you pull this list every single year, rarely will either Cadence or Huntington show up.
Yeah.
Rarely. What had happened was Huntington bought Cadence.
Yeah.
Well, in a merger or an acquisition, obviously someone's going to show as a big fat gainer, someone's going to show as a big fat loser, when really it was just Huntington acquiring Cadence. So it's not,
Makes more sense.
It's not really relevant. I would throw that out. You mentioned Summit Funding. So shout out to Todd Screama and his entire team, including Chris Clock, who were trying to get Chris to come down here and get on the show. They were at Summit, but Summit was acquired by CrossCountry. So Summit's going to show on your list as a big loser because they don't exist anymore. I mean, they're the Summit team of CrossCountry Mortgage, but Summit, the company, is no longer.
Yeah.
So CrossCountry absorbed all of that production, all of those producers. Now, a company like CrossCountry, when you are on top and when you are as big as CrossCountry, you're probably every single quarter, every single month, every single year, you're going to make the leaderboard for the most gained, but you're also going to make the leaderboard for the most lost. What they're trying to do is play that arbitrage.
Yeah.
Are we consistently growing? Right? Are we consistently growing? And let me talk about Rocket, because Rocket's a great lesson for all of us.
Yeah.
More bodies and more volume does not equal more profit.
Yeah.
Like, you know this with your portfolio of companies.
100%.
Just because you do more in gross sales doesn't mean you do as much in net revenue. When you look at Rocket and you look at their quarterly earnings that just came out, things are looking pretty bright at Rocket.
Yeah.
Now, can I speak to why they lost as many LOs and why they lost so much volume? My guess, Rocket has a massive call center. Rocket does a ton of consumer direct. When mortgage rates go from 5.99 to 6.79 and then back down to 6.59 because of the conflict happening in Iran and the Strait of Hormuz and the oil prices, well, you're not going to need as many originators when you have less leads. You're going to generate less leads when there's less demand. You're going to get less demand when rates are at 6.59 and not 5.99.
Yeah.
So that's going to make sense for someone like Rocket, but I wouldn't read any more into those tea leaves, because what matters most to me is Rocket's financials. Their financials have been the strongest they've been in years.
Yeah, I was going to say too,
because
because like positioning, I don't know if Rocket is, undergoing this, but like positioning yourself, you could take a huge loss on your net profit gain, but it's strategic because you're trying to invest in different places so that you can get the overall volume up, the overall net, the overall margin up 5 years from now.
Yeah,
right?
and Rocket also did a lot of acquisitions recently. So it's like when you acquire other companies, there's going to be duplicity.
Yeah.
And you're going to have to eliminate some of that duplicity.
Yeah.
And you also, y'all should know this, when you're buying a mortgage company, it's pretty risky because there's tends to be minimal assets, unless you have servicing rights. But there tends to be minimal assets. So the assets are the people. You can't really buy people. So it's common when company A acquires company B, all of the comp packages for the executives tend to be tied around trying to maintain those producers and keep them from defecting.
Yeah.
So this is where a lot of this data is really pointing towards. But I love looking at it because you mentioned New American is up.
Yeah.
Okay. If New American is up, that's going to make me say, why? What are they doing? If I'm their competitor, I'm saying, what's a New American doing well that I should be doing?
Well, what's interesting is, like, let's go into this, like top 10 gainers by LO count, right? More LOs, you think more total volume.
Well, it's an assumption.
Assumption.
And we just talked about the 4 agreements.
Yeah.
And
Totally.
the third
And
agreement,
assumptions is how you-
agreement is all
Shoot
about no
yourself in the
assumptions.
foot. Yeah.
Yeah.
But it's interesting because, like, New American Funding is up as a gainer by loan volume, $2.88 billion, but they didn't make our top 10 list for top 10 gainers by LO count.
Bro, you should love that. Shout out to Patty. Shout out to Rick. Shout out to their management team.
Yeah.
If you're telling me you're growing by volume, but you're not growing by headcount, that means the men and women that you currently have on your roster are doing more.
Yeah.
They are doing more. Now, none of us know if they're doing it profitably or not, but they're at least doing more. I would love that as a mortgage company. I've had years when I was running mortgage divisions where we added headcount, but we lost profitability. And I've had years where we lowered headcount and we made more money.
Yeah.
So, like, if I'm an outsider looking in and I'm looking at this data, I like that.
How about this?
Saying,
how about
more.
New Fifth Bank?
New Fifth Bank?
Yeah, they have top 10 gainers by LO count. But they're not. Well, that's interesting. I'm sorry, Fifth Third Bank.
Fifth Third. Thank you. Bank. I'm like new.
Sorry, I can't read, team.
Yeah.
Fifth Third Bank. They had
that captain hat's going to your head.
Yeah, I know. It's squeezing me tight here. I just want to be on the ship. Fifth Third Bank, top 10 gainers by LO count. I do not see Fifth Third Bank on top 10 gainers by loan volume. That's interesting. Yeah. So they gained LOs, but they didn't gain volume.
Yeah. So what did they do?
They need coaching.
Oh, potentially. Potentially, yeah. Look, if you're at Fifth Third, what are you doing in order to create your next top producers? Maybe you need to inquire about what we're doing on the enterprise level with our launch boot camp, 100%. Yeah. But no, there could be a reason and rationale, and that's where, just looking at the data surface level, although it's amazing, right? And shout out again to our friends at RETR for providing this to us.
Yeah.
It's like, why? Why did they add volume? Did they open up a new division?
Right.
Okay, maybe they open up a new division, and that new division is filled with the future of mortgage. Right. And maybe they did already contact us, which they didn't, but I want them to, and said, hey, Dustin, can you bring your proven playbook to these 50 originators and teach them what they need to do to go out there and generate 30 leads a month, fund 4 to 5 loans a month, and at which point they would gain volume.
Right.
Did they potentially just acquire someone? And when you acquire someone, you get the bodies immediately, but you don't get the pipeline and the production for 30, 60, or 90 days. So there's that as well. The problem with banks too is banks will license freaking everybody. Bank tellers are getting licensed. People doing HELOCs are getting licensed. If they are opening up a new servicing retention department, those people are getting licensed. So you find the banks and credit unions, a ton of people who have their NMLS, because with those, they're depository, so you're registered.
Yeah.
Well, registered, as we learned from having Bob Nemi on the show, is a little bit different than being licensed, but it all shows up in RETR as the same.
Yeah.
So they may have opened up, a brand new service department. All of those people are registered, but they're not actually doing loans.
Yeah.
Right. So Fifth Third wouldn't catch my attention because there's way too many variables that I just don't know without like sneaking into it. Now, did you see any brokerages on there? Like any Loan Factories, any West Caps, any Barretts?
Yeah, I did see Loan Factory. Hang on.
Okay.
I see them in the data.
By the way, shout out to Loan Factory for just inking your favorite word. Loan Factory just inked an amazing partnership with our friends over at Pylon Lending.
That's awesome.
I can't wait. We're going to have Trent on the show. Trent's the founder and CEO of Pylon Lending. We're going to have Trent on the show here in the next few weeks. Mike, I'm thinking about doing a part 1 and a part 2. Like, I'm thinking about doing an hour to an hour and a half episode, but breaking it up into 2 parts.
Count me in.
Yeah.
Loan Depot.
Okay.
Loan Depot.
Yeah. So
what do you know about Loan Depot?
A lot. Right? A lot. Like our friend Alec Hansen's over there.
Okay.
Huge fan of Alec. They're one of the top 10 lenders in America, have been for years. They've had some issues with profitability over the past years, and I only know that because it's talked about in the trade publications. They're one of those companies that are rumored to be in a good position to be acquired. There's a ton of mergers and acquisitions going on throughout both mortgage and real estate. That tends to be the season that we're in these industries. But I also know that their founder and CEO came back. And from what I hear talking to my friends over there, since he came back, things are getting more, I would say, normal, more what they were accustomed to in their heyday. I also know Loan Depot because I watch a lot of Major League Baseball, and they're a big sponsor of Major League Baseball. But what does their data say? What's RETR telling us about Loan Depot?
So what's interesting is they were a top 10 loser by loan volume. They were number 3 top 10 loser by loan volume.
Okay.
Number 7 top 10 gainer by loan volume. So
cool.
I don't know how you want to compare that, but
here's what I'll tell you. Loan Depot, since Anthony's come back and they restructured leadership, they're getting back after it in terms of attracting talent and onboarding new branches and new originators on the retail side.
Because they were a top 10 loser, number 7 as well by LO count.
Yeah, but then you have to understand, Loan Depot runs multiple business models. So they run the consumer direct business model and they run the what I call purchase focused self-gen retail model.
Yeah.
Well, when mortgage rates go from 5.99 to 6.79, a lot of opportunities evaporate overnight.
Yeah.
There's just not enough leads coming in the door. There's not enough people that you can serve.
Mm-hmm.
Well, that impacts your consumer direct division. Your volume's going to drop, and guess what? You're going to have to terminate some people.
Yeah.
Because those types of originators, they only originate or they only generate revenue when you provide them a lead.
Yeah.
So Loan Depot right now may be going through a phase where their volume is down because the consumer direct channel is hurting. Mm-hmm. Their LO count is going down because they're terminating those that don't self-generate. However, they're out crushing it, adding new originators, but they're not adding those that need leads. They're adding those that generate their own leads.
Yeah.
So that's 100% what you'd be seeing in there.
That makes sense. Okay.
TLOP Unite is not your typical mortgage event. This is the first ever TLOP cruise experience built exclusively for originators. And for 4 days, it's not about the speakers, it's about you. We're talking breakout strategy sessions, real conversations, curated events, and uninterrupted access to a community that helps you grow. If you're serious about taking your career to the next level, this is where you need to be. Space is limited and the price is right. So click the link now and learn more.
So IMB.
Yep, Independent Mortgage Bank.
Yep, bank/CU. And
yeah, so a bank/CU is a true depository.
Yep.
So I'll give you an example. Let's go with like an easy layup. Cool. Let's do CrossCountry because they're the largest.
Okay, cool.
And CrossCountry actually doesn't have, at this standpoint, to my knowledge, any type of depository affiliation. Okay. Gateway Mortgage purchased a bank. Cornerstone Mortgage purchased a bank. Flat Branch Home Loans purchased a bank. Movement purchased a bank. Then you have companies like Waterstone Mortgage was already bank owned. Mm-hmm. I believe Prime Mortgage is owned by a bank. So there's some companies out there that operate in a space of kind of hybrid where it's like, wait a minute, are you a wholly owned sub of a bank? Are you run and operated by a bank, or is it just like the holding company happens to own a mortgage company and happens to own a bank? Yeah. Nova's Home Mortgage, right, is owned by a bank. But I can pick CrossCountry because I know that there's no bank affiliation.
Right.
Okay, so we call them an independent mortgage banker.
Yep.
They're a banker because they are underwriting and funding their own loans, but they're not a bank because you can't go there for a checking account, a savings account, a money market account. Mm-hmm. You're not opening up your CrossCountry credit card. You're not getting a CrossCountry auto loan.
Yep.
Chase, Bank of America, Citi, or even Mid-Florida Credit Union, Fairwinds Credit Union, Elevations Credit Union. Like, you go to those places, yes, they do mortgages.
Yep.
But you can also get a savings account, checking account, a money market account. You can do CDs. They probably have a financial advisor. They have tellers.
A lot of products in different areas.
Yep. So that's a bank/CU.
Got it.
An IBM is an IBM.
Yep.
And then a broker is a broker.
A broker is a broker.
Right. And what's crazy is today you have a lot of brokers that also are operating as like a mini, M-I-N-I, like not mini, like M-A-N-Y, but mini, like a mini correspondent.
Okay.
Where they're able to hooked in with like United Wholesale Mortgage or Freedom Mortgage, maybe even Rocket Mortgage, and those companies were able to help them solidify a warehouse line of credit. Mm-hmm. And they still send their loans to Rocket, send their loans to UWM, send their loans to Freedom. Freedom, Rocket, and UWM underwrite them.
Yeah.
So that means these brokers aren't delegated to do the underwriting. They still get underwritten third party. However, they're able to disclose them and fund them on their own warehouse line.
Yeah.
And then like UWM, I know this because they told it to me, they're buying those loans within 4 or 5 hours. So they get them off the warehouse line, but it lets that brokerage operate like a banker would.
What's the process like for being approved for a warehouse line of credit? Like
there's a net worth, there's years in the business. Yeah, you're not going to give it to just anybody. There's definitely requirements. Yeah. But like you, Steven, and I could go open up our own mortgage company and pretty quickly, due to our experience. Yeah. With the net worth, with our experience in business,
Right. Yeah.
then we'd be able to get one.
Cool.
So they're not as hard as they could be, but they're not just open to anybody.
Right.
But anyhow, those brokerages are now operating what we call mini C or mini correspondent.
Okay.
Which is its own type of hybrid.
Yeah.
So I don't want to confuse people too much.
Yeah.
But
So
you're-
the three I'm going on are
broker,
all right,
IMB, or bank.
you
That's
did it.
Kinda,
So it was a
yep.
really good background on the three of those, right? So LOs lost in both IMB and bank CU were more than the LOs gained.
Yeah.
But under
so net
broker,
negative.
yes,
So
net negative.
IMBs,
Yep.
credit
And
unions, and banks
were net
in
negative
the first 4.5 months of 2026 were net negative
on their body count for LOs.
on their body count. Yep.
So brokers were net positive.
Cool.
It's the only vertical that was net
And
positive.
I'll give you the world according to Dustin Owen.
Yeah.
Right. This is as Colin Powell used to say, in my humble experience. This isn't opinion. This is experience.
Yeah.
I have worked in this industry for 20 plus years. I've operated at a very high level. I pride myself on being one of the most connected people in the industry
Yeah.
and being one of the more influential people because of this show.
Mm-hmm.
But you're allowed to disagree with me.
Yeah.
Right? You're allowed to drop a comment in YouTube and tell me that you think I'm wrong and why.
Yeah.
And you can say and tell me why you think you're right and why. And you may be able to change my mind. You may be able to see it from your point of view, or you and I may agree to disagree. Right? But this is the world according to Dustin Owen. There are two reasons why a broker would be net positive first 4.5 months of 2026.
Mm-hmm.
The first, the broker community is going to love me for saying this, because you have a lot of people leaving banking and leaving retail, and they're going to the broker model. And in their mind, in their point of view, what they believe is that they'll have more flexibility, more autonomy, make more money, have better rates.
Right.
Right?
Makes sense.
That's the reason for doing this.
Okay.
Okay, cool. And this has been a trend for going on 7, if not 9 years.
Yeah.
Right? It started with the whole brokers are better movement. Now, I do not believe brokers are better. I've gone on record saying that multiple times. I also don't believe brokers are worse.
Mm-hmm.
I don't think credit unions are better. I don't think call centers are better. I don't think they're worse either. I love the mortgage industry. I think each business model serves its purpose. And I think we as originators need to find the business model that works best for us. And it's okay that something worked best for you for the first 3 years, but it didn't the next 5, but then something else may work for the next 10.
Mm.
I mean, the way that I made my millions, the way that I made a name for myself over 20 years, if I got back into the industry, that might not be the way I go.
Right.
I may fall in love with consumer direct. I may go out to Silicon Valley, hang out with our friends at Pilaf Lending, and be like, ooh,
Yeah.
I want to create a business model that leverages their tech.
I love
at
tech.
At which point it may be a very consumer-facing model.
Yes.
I was never the discount lender.
Mm-hmm.
I may open up a new shop, say I want to be the discount lender.
Right.
It's not that I think everyone should be the discount lender.
Yeah.
What I'm saying is that the place I am in my career, that's the angle I want to take.
Yeah.
So I never have bought into the brokers are better. And quite honestly, studying the industry, coaching originators that are credit union, mortgage brokers, IMBs, and banks. I have clients that span all four. The one thing I don't do are consumer direct, because I wouldn't be the best person to coach you through consumer direct.
Mm-hmm.
Fast forward 3 years, you and I are running consumer direct business. Maybe we would be great coaches at that standpoint. Right now, we're not.
Right.
But those are the four that I'm coaching. And when I coach people a certain way, and that's to be the community expert. That is to be service first, to be the advisor, to generate your own leads, to make it less about rate and fees and most about service and client experience, and then generate the most leads, fund the most loans, make the most money. I don't care if it's broker or banker. And I will tell you, the men and women who make the most money per year in this industry all run the same model, and they're running it banker, they're running it broker, they're running it credit union.
Yeah.
Okay, they're running the same model, right? They still have an LOA, a dedicated processor.
Yeah.
They're still leveraging technology for lead conversion, lead follow-up,
Yep.
database management, and they're still making roughly the same amount of money gross, and they're making the same amount of money net per transaction. That's what I know. Now, so my first answer, very long-winded answer, I'm sorry.
No, it's fine. And
was this.
I got to follow up.
There is a curiosity to go broker for people who've never done it.
Yeah.
So because of that curiosity and that particular trend, it would make sense that the broker community is net positive on LOs.
Yep.
Now, second, broker community is going to hate me for this, but it's the world according to Dustin Owen, and I have the data. Like, I got RETR in my back pocket. Right? By the way, if I didn't have RETR in my back pocket, I also have MMI in my back pocket, and Model Match in my back pocket, and Ingenious in my back pocket, and Cotality in my back pocket.
Other data sources.
We are friends with all 5 of those companies, personal friends. Right? It just so happened that Hoop, I was on a call with him because he's doing the sponsorship of the cruise, and he sent me this data, and I was like, hell yeah, let's make a podcast episode out of it. I will tell you this. Brokers have the lowest barrier of entry for who they'd hire.
Yeah.
Brokers are more willing to hire someone who's part-time.
Makes sense.
For someone who has no experience, right? They just are.
Our brokers are looking for an LO that produces volume, or they just want a quantity of LOs?
It depends.
That will then create the volume.
It depends. There's a company out there that are massively popular. They have a huge headcount. They make tons of money at the top, right? Very profitable. But their business model is one in which where they make the money.
Like low volume per LO, you're saying?
Yeah.
But a lot of LOs.
But a lot of LOs.
Got it.
Because maybe, they bring in more LOs, they can sell them their coaching products. They can sell them their technology products. They can sell them their mentorship.
Yep.
And, that's the way it works.
And
by the way,
too.
It works the same way in real estate.
Yeah.
Like in real estate, the Keller Williamses and the Remaxes aren't making their money on the men and women who are selling 50, 70, 100 homes a year.
They're making it on the satellites.
They're making it on the men and women who are only doing 6 transactions a year.
Yeah.
Like at Keller Williams, you're going to pay a 70-30. Well, you're going to get a 70-30 split. And by the way, I don't work at Keller Williams, so I don't know this verbatim. If like, I'm just going to, in general, give you an idea.
I got you.
So you're going to get a 70-30 split until you've done X in volume, at which point your split becomes, let's say, 100%.
Yep.
So it's like once KW's made their money, you get to keep the rest.
Yeah.
So KW is going to get capped on how much they make on you.
Yep.
So where do they make their money? They don't necessarily make their money on the mega producers.
Yeah.
They need the mega producers, but it's everyone else. So there's definitely some broker shops out there that they're like, no, I don't care if this person only does 4 loans a year and they help me recruit another 10 people who only do on average 4 loans a year.
Yep.
But if those now 44 people are all having to pay $100 a month for this service and $200 for this coaching, then what I'm really doing is making $300 times 44 people.
Yep.
Right. So, and there's nothing wrong with that business model. I may look at that as a business operator, and you may look at it and say, whew, that's pretty sexy.
Right.
Now, their competition makes fun of them and says, look, your average closing per LO is 0.9 units a month.
Right, which is crazy.
Yeah, there's other people that are double that. There's other people that are triple that. When I ran my operation, we averaged 4 closed units per LO.
Yeah.
In a down market, it was 3.
But there's a lot of overhead to carry the LO.
Well, that's another thing. In the broker model, you have a lot of people going 1099.
Right.
Now,
okay.
I'm not the IRS. I'm not the state compliance department. That is not me. Bro, I would stay away from it.
Yeah.
I would 100% stay away from it. You know this because we talk about doing 1099 here at TLOP.
No, because they can argue that they were a W-2, and then you're on the hook for quite a bit as a business.
Yeah, I just don't want to go there. But you have plenty that are allowing the 1099 model.
Yeah.
At which point, right, it's very easy to hire someone and be like, ooh, let's let them do a loan if they do and a loan if they don't. I don't care.
Yeah, well, that's easier.
Yeah, it is. But I would tell that person, you know what? How you do anything is how you do everything. And we are the sum of what we tolerate. Mm-hmm. I would never want to have a sales culture where I tolerate part-timers. I would never want to have a sales culture where we allowed for and accepted people doing a unit a month.
Yeah.
Now, if you're newer to your career, I'd give you 2 years to 2.5 years to ramp up. Mm-hmm. But at some point, no, I have a minimum production standard. Because when that person submits a loan to my best lender, I can have my best lender rolling their eyes being like, I hate getting loans from this company because their LOs don't know what they're doing.
Yeah.
Now, maybe I have some some stopgaps in there, and maybe I'm using file setup personnel or some kind of a processing team that acts as a bit of a wall of defense. But short, easy answer, I'm going down a rabbit hole and I'm rambling, so I'm going to stop doing that, is there one component is a lot of people are leaving retail to go to broker.
Yeah.
They're very enticed by it. It's sexy, and they want to taste it.
And
the second is brokers also are more willing to hire with less restrictions and less standards.
Yeah.
Right.
Standards. Good
Yeah.
word.
Yeah. Just
Yeah.
And yeah. So
Yeah.
there we go.
But to round that out too,
Yeah.
just to kind of support it, one last nugget on it: volume gain versus volume lost by channel. Broker is the only segment or the only channel that gained by volume versus lost.
Okay.
Okay.
So they're net positive according to this report from our friends at RETR.
Yep.
Can I look at that page?
Yeah.
That you have?
This is a cool page because it's
Okay.
in the billions. Even though
Yeah.
even though total volume is lower on the broker channel,
Yes.
they still have a gain versus a loss.
Yeah, brokers make up on average about 20 to 25% of the mortgage volume.
Okay, cool. So that makes
being
sense.
originated.
Those numbers make sense.
Yep. So you're basically saying that volume gain versus lost, IMBs had a net negative of $2 billion. Banks had a net negative of $2 billion. Brokers had a net positive of $3 billion.
Yep.
Yeah. I'd like kudos to brokers.
Yeah.
Like, what are they doing? If I'm at that bank, if I'm at that IMB, I'm looking at the broker channel saying, hey, what are you doing?
Yeah. Is it
Right? Maybe
is it coaching? Is it right?
Yeah.
For more volume.
Providing leads. Maybe
Leads.
Maybe brokers are showing the rest of the world a little something. Like, you got to take chances on these men and women.
Yeah.
You got to be willing to hire them that don't have experience, that don't have a book of business. Find ways to support them because maybe they're getting it from there.
For example, like, this could be a terrible example, but like lower.
Yeah.
They're a broker.
No.
Okay,
IMB.
what are they? Oh, they're
an
IMB?
Yep, they're an IMB.
Okay. I was going to say because there are acquisitions happening, right? So then there is a lead kind of pool that they're getting through the acquisition. There's no brokers out there that have made any big acquisitions.
No, there
and now,
are 100%.
Well, that's what I'm saying. And now they have this lead pool, so now maybe that is attributed to the volume gain.
I mean, look, there's companies like this, like shout out to Anthony Casa over at U Mortgage, and I don't know Anthony that well, but we're connected on social and we DM each other from time to time. I'm pretty confident if I read this correctly.
If you're a licensed originator who's closing loans, but you're not consistent, this is for you. If you're brand new or just looking for motivation, trust me, this is not for you. Most LOs don't need more information. They need structure. They need proven processes and somebody to hold them accountable. T-Lob's Originator Coaching gives you weekly live coaching, scripts top producers actually use, and step-by-step business systems you can implement immediately. Not someday, we're talking day one. You're not watching videos alone. You're executing in real time with other originators who take this seriously. Right now, you can try it free for 2 weeks. That's 2 full weeks for free. You'll sit in on live coaching calls. You'll get access to the frameworks and see exactly how top producers run their business. If it creates clarity, if it creates momentum, or even if it puts wins on the board, you keep going. If it doesn't, no worries, you can cancel. No pressure at all. Click the link, start the 2-week trial, and finally, build this like a business, not a side hustle.
Like, he took his business model that was more IMB based and flipped it straight broker going forward.
Awesome.
Right? So like some of this data may be someone as big as oh my God, I'm going to say UWM, but U Mortgage.
Yeah,
Some as big as U Mortgage. Maybe their data 6 months ago was showing as IMB data.
Yeah.
Now their data is showing as broker data.
That makes sense.
At which point, that's about $2 or $3 billion in volume.
Yeah.
And that could have been it.
Yeah.
And then, yes, you do have some consolidation. I don't see a broker going out and buying an IMB though. So you're not going to see a broker. It would be a broker consolidating with another broker.
But what about a broker?
At which point it would change. It would stay in the same channel.
What about a broker buying like a real estate lead gen platform, like what's been happening?
Oh,
Would that count, or
yeah, I don't know. Like,
you know,
well, I mean, yes. Would you see more volume?
because if you have that honey pot and now you're feeding the LOs and
But
volume goes up,
you have to tell me, where is that volume coming before? Like, because that lead gen honeypot, that volume is going somewhere else before.
Mm-hmm.
So if you're saying they used to have a partnership with an IMB,
Mm-hmm.
now this honeypot lead source has a partnership with a broker. Yes, but I don't think that has really transpired.
Okay.
That wouldn't be why brokers show a net positive with volume.
Yeah.
I think the net positive in volume may just be, and Matt Ishbia is going to love hearing this and seeing this, like that net positive is because more people are going broker. Some better producers are going broker, and those that have gone broker, maybe they were newer to the industry a year ago, 2 years ago. Maybe they finally graduated. I mean, we've recently graduated 3 or 4 people from Barrett Financial from our signature launch boot camp.
Yeah.
I mean, this launch boot camp takes men and women from only doing $6 million a year to doing $60 million a year.
The proof is in the pudding.
Yeah. So like if you start having those people introduced to coaching platforms like ours,
Yeah.
and then all of a sudden you didn't have to grow in headcount, just the people that you brought in that maybe 2 years ago were newer and now they're less new.
Would you say once you go broker, you don't go back?
No.
Oh.
Not one bit.
So some people go back.
Not one bit. I got
Bad joke.
for as many friends that I have that are like, I went broker, it was the best thing that ever happened to me. I got friends that said, holy shit,
I'm going
I will
back.
never do that again.
Interesting. Okay.
Yeah, it's to each is their own.
Yeah.
I mean, and like the people I know are doing 20, 30 million a year.
Yeah.
Right. So like, and I had one in Texas and one in Florida that come to mind like that.
Solid.
Right. But I can count as many people that are like, oh, I'm loving it.
Mm-hmm.
Right. I'm loving it. It's to each is their own. That's why I coach and preach. We have to find what works best for us.
Yeah.
And when I say works best, you'll have to find where can you go to focus on doing the things you're good at and the things that you love to do.
Mm-hmm.
Like that, like your genius zone, they call it. So you're focused on staying in your genius zone. You're working 40 to 50 hours per week and you're making the most money net per year.
Yep.
That's what we're all seeking.
Yep.
And really, regardless of industry, regardless if you're in sales or not, if I'm an engineer, would I not want to say, I want to go work for the engineering firm that lets me focus on the things I like to do and the things I'm good at. I'm willing to dedicate 40 to 50 hours a week doing that task, and I want to make the most money per year. I mean, that's what we're looking for. I don't care if it's a credit union, a bank, an IMB, a broker, consumer direct, or self-gen.
Yeah. That's what we're all looking for.
Yes. I mean, Greg Scher over at NFM Lending has this mantra, all of us. And sometimes you'll see me rocking the all of us hoodie. Mm-hmm. Yes.
Oh,
We at TLOP, we represent all of us.
Yep.
When I retired from TLOP in 8 years and I'm living in Washington, D.C. and I'm advocating on Capitol Hill, it's going to be for all of us.
Love it.
Yeah. No. Was there anything else on that report that stood out to you?
No. That pretty much summed it up. The key takeaways, though, I'll just summarize them real quick. I know we kind of went through it. Broker's the only channel with net positive LO movement, which we just chatted about. Rocket Mortgage leads all companies in volume lost. Cadence Bank leads in LO count lost.
Yeah. And Cadence Bank is a one-off because they were acquired by Huntington.
Exactly, which made sense. CrossCountry leads volume gained. Huntington Bank leads LO headcount gained.
And Huntington Bank acquired Cadence, and its volume gained at CrossCountry is very much the strong get stronger, the rich get richer.
And then biggest cross-channel move, 1,130 IMB LOs migrated to broker. So the net flow favors the broker channel, which we just finished on. And then bank/CU, they're quietly contracting. So their net was minus 112 LOs. And that 1.8 billion in that equaled 1.8 billion in volume, and it was driven by Cadence and Synovus exits.
Yeah, and again, Cadence and Synovus could very well also be some kind of an acquisition.
Right.
So it'll be interesting to get with James Hooper and RETR at the end of the year.
Yep.
And actually digest some of this information.
Yeah.
Right? Or maybe
episode.
our friends at MMI or our friends over at Model Match, maybe they have data that they'd be willing to share, and we can run through one of their reports as well.
Yeah.
By the way, Karina, can you do me a favor? I'm second guessing myself. Will you do a quick Google search for me and say, did Huntington Bank buy Cadence Bank? Because now I'm wondering, what if Huntington bought Synovus? What if I do this all the time.
Oh, because of that last.
Yeah, like, ready, I just bought a tri-bike, actually from a mortgage guy, which is like the craziest thing ever.
Crazy story.
Crazy story. I just bought a tri-bike from a mortgage guy, and we're going to end up having a meeting with him. Like, this dude is shout out to Luke, by the way. Luke lives in St. Augustine, and he is generating 3 leads a day on TikTok to go on TikTok Live.
Wild.
Yeah, and I want us to go TikTok Live.
I know.
I want to go TikTok Live. No, giving free career advice. That service that I'm already doing.
Yeah.
How about like a coaching career advisory 1 hour every single day, me, TikTok Live?
It's just wild because it's not like our demographic with the age group. It's crazy, but it's cool. It's working.
You know what?
It's proven.
I had Jordan Nutter on the show a year or 2 ago now.
Yeah.
And she'll remind me that
all about TikTok.
That TikTok will find the right people.
Yeah.
And 50-year-olds on TikTok will be shown her information.
Yeah.
So, the algorithm is going to know, don't put me in front of a 16-year-old because my content doesn't work well.
Right.
I want 26, 36, 46-year-olds, mortgage
Very
professionals.
Yep.
So anyhow, but no, I felt like a total douche.
Yeah.
So he drops off the bike and he's taking his kids to Disney. And of course, we're sitting there chatting because we're mortgage dudes. That's what we do.
Yeah.
And I had an envelope that I had sealed up from the money that I got from the bank to hand to him for the bike he's selling me. Mm-hmm. And I take the bike for a spin around my neighborhood. I come back 5 minutes later. He's still sitting there. I'm like, uh-oh, what happened? So I'm thinking maybe when the kids has to go to the bathroom, he wants to ask my permission. Like, that happens.
Maybe you're short.
Well, I was short $100.
Oh.
He goes, hey, we agreed on X, right? I'm like, dude, I have no idea. I go, whatever we typed is what I owe you.
Yeah.
Right? Because we were chatting through Facebook Marketplace. Yeah, I shorted the guy $100. Not intentionally.
That's awesome.
Like, if you're going to short someone, short him like 500.
You need some money?
Short him $1,000, right? Hey, y'all, I do need money. That's why I'm pimping out my coaching like crazy.
That's right.
Come join T-Lop Coaching. Yeah, so like that's one of those like I'm asking Karina to look something up because I had these brain fart moments. So, like, I had this as well. I want to clarify something.
Yeah.
I had a buddy of mine who lives in Oklahoma that I met because of the show.
Okay.
Right? And he's a fan of the show. That's how he and I met. Well, I was giving him a shout out. I was giving Lucy Thornton a shout out. I was giving Craig Snell a shout out. This is like probably 3-4 episodes ago. Mm-hmm. And in no way or means was I saying these people coach with me.
Yeah.
I said these people have leveraged my podcast and the free content we put out there. Mm-hmm. In lieu of coaching, right? Like, they're like, why pay for something I can get for free?
Yeah.
And I guess he had friends of his that reached out like, oh, you coach with T-Lop, you coach with D.O., and he thought I was trying to tell people. I'm like, no, bro. I go, hey, if y'all think I actually know what comes out of this mouth, I don't. I had to say that to my mom, and she was like, oh, I was listening to your podcast episode the other day, and do you remember when you said, I go, no, Mom, I don't. Like, I don't remember.
Yeah.
Like, this mouth
blackout moment.
This mouth has made me tons of money. It's also backed myself into some corners and forced me to get tough.
Yeah.
Right? All throughout my life.
Yeah.
But no, I don't remember everything I say because I'm here having fun with my friends and trying to give value.
Yeah.
And having a good time while I do so. But I want to set the record clear for Chase's friends.
Yeah.
That no, Chase has never coached with T-Lop. I have never been Chase's coach.
And this is unfiltered, kind of uncut. Like, that's our big thing is we don't really cut a lot out.
Well, I said to Chase because he was like, bro, I had like 10 of my friends reach out and ask me.
Yeah.
I go, Chase, do you know how happy that makes me? He's like, what are you talking about?
A lot of people.
I go, you have 10 friends
that tune in.
That also tune in, and all 10 heard this?
Yeah, that's cool.
I'm like, we are doing something right. But to set the record straight, so I had to set the record straight about that. I need to apologize to Luke because I didn't mean to short you the $100, bro.
But drum roll.
Was that right or wrong?
It says announced they will acquire Cadence Bank in a $7.4 billion all-stock deal.
I was so worried to get
it would have been the
texts.
first episode we had to cut.
No, I mean, I just roll with it. But yeah, man, I say stuff all the time. Like,
that's awesome.
My mom's like, did you say that? I said, well, did you hear me say it? She goes, yeah. I go, is it recorded? She goes, yeah. I said, then I said it.
Must have been true.
Yeah. The good news is on the whole Chase, it wasn't just Chase because I included him with Lucy the lender and Craig Snell. I mean, dude, Craig does $100 million a year. Lucy does $40 million a year.
Yeah.
And like these are some big producers.
I've heard Craig Snell, yeah. That name.
But I lumped them all together. But if you go back, I said in the beginning, like, I'm not taking credit for their success.
Yeah.
Like, they had to put in the work. Mm-hmm. I said if I did anything, I put out content, they consumed it, and my thought is, and most of them have told me that they did this.
Right.
they listened, took notes, and went and implemented.
Yeah.
Right? Like
Huge.
that was the purpose. The good news for me is not everyone is a Chase. Not everyone is a Lucy. Not everyone is a Craig. And they need more than just what you can get for free.
Yeah.
They want accountability. They want structure. They want hand holding. And that's why we have the 3 different ways people can come and coach with us. We have the community, which is what most people do because it's the number one value, the most affordable. And it's literally, I did this math today. Our coaching, less than $9 a day.
Crazy.
Literally, we have 20 opportunities a month for you to get live coaching from a top producer.
Wild.
20 opportunities a month.
Yeah.
Plus the entire catalog that you can go back and watch and listen at will.
Yeah. And you can sign up for a 2-week trial.
Correct. Right.
So no-brainer here.
We have that. We have our boot camp. Our
Yeah.
boot camp is how we put you through a hardcore 16 weeks if you're an individual that's in a small group. If you're a company, we have a different enterprise edition.
Yeah.
But it's the same coursework, same curriculum, same reading assignments, etc.
Mm-hmm.
But anyhow, we have that and we have our elite. What I'm loving right now, Mike, we're adding 1 to 2 new elite members a week.
Yeah, it's wild.
A week. There's a waiting list right now for Coach Brian Kimball. It's
awesome.
A freaking
Shout
waiting
out
list.
Brian. Jeez.
Yeah, but I'm loading up Coach Rebecca Richardson right now.
Yeah.
So like if you're somebody who thinks that you'd love to come learn from the mortgage mentor, you typically need to already be funding at least $1 million to $2 million a month for this to make sense. Like elite coaching is for only the elite. But anyhow, Coach Ross and Scott are crushing it. Coach Gwen actually took on a client. And yeah, we're loading up Coach Rebecca. So yeah, that's all the things that we're doing. A lot of people need it, but not Chase Loggins.
Yeah.
Chase at Movement does not need our coaching.
Yep. I'm glad you cleared this up.
He just tunes into the show.
Yeah.
Right?
Shout out Chase.
All
again.
right. And then Karina, so I was correct. I was not wrong. Will you look up Synovus Bank and then we'll find a way to put a bow on this?
Synovus?
Yeah, spell Synovus for us.
Synovus.
Yeah, just kind of like Google Synovus Bank acquisition or merger. And I say this because these are typically not big players in the mortgage space where you'd see a big pendulum swing.
I don't know if this is your answer. It says is merging with Pinnacle Financial Partners in an $8.6 billion all-stock transaction expected to close on January 1st, 2026.
Oh, so
there we go.
There you go.
Yeah. So like, if you're in the know, you can read reports like this and you can pick out the outliers.
Yep.
Which I would say Synovus, TD, and Cadence, all outliers.
Yep.
But the rest of that data inside, there are stories within the story that I think we all need to be able to study, but we can't do so if we're not in partnerships with companies like RETR.
Yeah.
Or we got MMI1, or we got Model Match, or we got Ingenious, or we got Cotality. Right? It just so happened we have a great relationship with Steven and James and the whole team at RETR that they provide us with this data, so we turned into a podcast episode. Yes, so let's do this, guys. Let's have some fun. Get wild and get crazy in the comment section.
Can't wait.
On the YouTube channel. Be polite, be professional, but let's definitely have some fun. If you're only listening to us on Apple and Spotify, we always say thank you. Give us the 5-star review. The 5-star review lets other people know that this content doesn't suck. But make sure you go over to the YouTube channel and click subscribe. It's more than just a podcast when you go to YouTube because we have over 400 additional pieces of content, whether it's Mortgage School, the DO Show, Talk Mortgage to Me, or even Coach's Corner.
And you get to see our pretty faces.
Well, you get to see
your
Karina's
pretty face.
My pretty
Yeah,
face.
you get to see Karina's pretty face and our ugly mugs.
And our ugly mugs. You're right. You're
but
right.
make sure you click that subscribe button. And yes, if you're somebody interested in coaching, we built this for you.
Yep.
I didn't want a coaching company 3 years ago. I built this because of the wild popularity of the show. And as my influence grew in the mortgage industry, I saw a massive need. And I decided to solve for that need. All that information can be found on our website, tloponline.com. So she's Special K, a.k.a. Karina Mojica. He is Mike Siciliano. We call him Marketing Mike. I'm Dustin Owen, the host of this show. That is all the time we have for you today. But we do look forward to catching you, A, on the TLOP cruise this September, and B, on the next episode. Peace.